Good afternoon. My name is Richard Glover. I'm chairman of Albion Venture Capital Trust, and it's my pleasure to welcome you to the company's annual general meeting. I'd like to begin by introducing my fellow directors, Anne Beresford, Richard Wilson, and Nita Patel. And on your behalf, I'd like to thank them for their continued enthusiastic involvement in the Venture Capital Trust and their continued commitment. Can I also introduce Will Fraser-Allen, the managing partner of Albion Capital, who are our investment manager, and he will shortly give a presentation on the results of the company for the year ended March 31st of March 2024. So moving on to the formal business, the quorum for the AGM is 2 members entitled to vote in person or by proxy. I can confirm that this has been met, and I therefore declare this AGM open. The notice of the meeting has been in your hands for the statutory period, so I will take the notice as read. Due to the success of the previous year's virtual AGMs and also to maximise engagement with shareholders, the board has again arranged for the Lumi team to broadcast this year's AGM using its online platform, which enables members to interact fully, including taking part in a question and answer session and voting on the board's proposed resolutions. Before I hand over to Will for his presentation, I'd like to explain how the voting process will work. But let me first state that if you've already submitted a proxy vote to the registrar, you don't need to vote again unless you wish to change your vote. The resolutions will be voted upon by way of a poll. The votes received under this process will be added to the proxy votes that have already been received and verified by your independent registrar, Computershare. So once I declare the poll open on the Lumi platform, a list of resolutions will automatically appear on your screen. Please select the option that corresponds with how you wish to vote, and the option will change colour and a confirmation message will appear to indicate that your vote has been passed and received. To vote on all resolutions displayed, select the Vote All option at the top of the screen. If you want to change your vote, you have the option to reselect your choice. So, I now declare the poll open. Turning to the main business of the AGM, following the manager's presentation, the directors and manager will take questions from members on the company's financial results and the proposed AGM resolutions. I'd like to thank members who've already submitted their questions and queries through the chairman's email address. If you wish to ask questions, please select the messaging icon from within the navigation bar and type your question at the top of the screen. Click on the arrow icon to the right of the text box to submit your question. Please do so as soon as possible so that it reaches us ahead of that section. So let me now hand over to Will Fraser-Allen for his presentation.
Richard, thank you very much. A big welcome to all our shareholders who are listening today. So I'm going to take you through the company's annual results, and that's for the period to March 2024. So if I turn to the next slide, top level financial summary shows, I'm afraid, a not particularly fun result for the year, I'm afraid. We saw a decline of 6.9%, which is clearly well behind our target. And I will be talking at some length as to why this is the case and as to why we can be optimistic for the future. That said, the long-term return for the fund is still very good. So total shareholder return to date is just a tad under 240p. We continue to pay our dividend in line with our 5% target, and that was a dividend of 2.46p. And the NAV finished the year at 44.93p. So if we move to the next slide, let's put these results into context. Is that we are still facing some challenging times. During that year, we continued to have a challenging macroeconomic environment, but also we continued to have a fairly complex geopolitical situation, not least with 2 ongoing wars, one in the Ukraine, and secondly in Gaza. So these are not easy. It's not an easy environment for any company, and small companies are particularly exposed to the world around them. And this has resulted in an environment where inflation has now fallen, and it's somewhere near the Bank of England's target, but we are still in a period of elevated interest rates, albeit we are optimistic that those have now peaked, which does give us cause for optimism that we will have an easier period going forward. That said, the portfolio has been designed over the long term to provide resilience, and that's by backing mission critical products and services, which their customers continue to need. And what we have just announced our first quarter results, which I'll talk to in a final slide, but those are considerably improved on where we were during this year under review. So if I move to the next slide, we can talk about the longer term performance, which I think is important, because when looking at venture, it is a long-term game, and looking at even 1, 2, 3 years is really very short in the world of venture capital, where typically some of our investments we could hold for a decade or more. So looking at a sort of 10-year performance at 53%, that's in excess of our 5% dividend target each year. And if you remember, that is very much what we seek to deliver over the longer term, is a dividend of 5% that is at least covered. On a 5 year, on a 3 and 5 year, we are currently behind that target. So if we move to the next slide, we can dig into a bit more detail. Effectively, what has happened here is that the portfolio has gone through a dramatic change from when the company was originally founded as a vehicle to invest in asset-based companies. So those who've been shareholders for many years will remember the days of hotels, pubs, health and fitness clubs. The world moved very, very sharply in a different direction in 2018, when government policy in respect of VCTs changed, and the schemes were directed at much higher risk, more innovative, and younger companies. So that did involve a wholesale change in the investment policy for this company to invest in those young, innovative companies. And that inevitably means that the portfolio is exposed very much to technology in its various forms. And I'll talk a bit more about that in due course. Importantly, 2/3 of the portfolio is now in these growth companies. But what you do have in venture is periods of short-term volatility. It's really part of the experience, I'm afraid, of investing. But you do that in the knowledge that the performance over return will outperform other asset classes. And this concept's been coined as the J-curve effect. And what that means is that in a newly created venture portfolio, as we had here, you do experience the underperformance of some of the earlier investments before the portfolio matures, and you get the outsized returns of that maturing portfolio over time. Hence this idea of a J-curve. But importantly, what we can now look forward to is those winners beginning to emerge as that portfolio matures. So if we turn to the next slide, we dig into a bit more detail into the year's performance. Fundraising, we didn't do a fundraising this year. That was because the fund, in the view of the board, had sufficient capital, therefore didn't need to raise. And we're always cognizant at Albion that our VCT should only be raising the capital that they need and can sensibly deploy. In terms of exits, we have had a fairly quiet exit period, and that's reflecting a broader mergers and acquisitions market, which saw little activity. So there was one exit of note, which is Ophelos, and I've got a slide on that in a bit. But we did continue to invest, albeit at a slower rate than in 2023. And again, that very much mirrors the broader venture capital industry that did see a quieter year. So we invested in 6 new companies, about 2.7 million. And then we continued to support our portfolio to the tune of 3.5 million. Share buybacks, as you'd broadly similar to previous years. and similarly dividends, as you would expect with a 5% target, stays roughly the same. But let's just dig in a bit more on the next slide and look at those key drivers of that valuation, negative valuation movers. First pick up some positives. There are companies that are beginning to show real promise in the portfolio, and we should be encouraged by that. Particularly Gravity, it's trading very strongly. Ophelos we've sold, and I'll talk to that in a minute. But against that, we did have a number of businesses that were written down. Now, importantly, these are not businesses that are written off. So this isn't permanently lost value, but this is a reflection that some of these companies will take longer to develop. And in that respect, Selden and Solidators, or Threadneedle Software Holdings, as it's known, did see slower growth than we had anticipated, hence the need to reflect that in our valuation. And then elsewhere, as you would expect, a number of ups and downs, and the detail of those can be found in our annual report. But certainly just in terms of some of the companies that are coming through and are beginning to look very encouraging are Excellex and TEM and Runa. Just quick mention on the negatives, the Shonay River Hydro, you may be slightly surprised to see a renewable energy asset showing negative returns for the year. That reflects that we've now held the asset for a period of time where we have a much greater understanding of what the generation potential is for that Scottish Hydro run-of-river scheme. And what has become clear over the past years is that the water flow is not as strong as the technical DD had suggested. And as we now move to a much more actual-based assessment of value, because we've got that data to do so, that has given rise to us reducing our view as to what the generation potential of that asset is. So it's a sort of one-off rebase based on the reality as opposed to the plan. If we move to the next slide, the portfolio is moving on. Cash has come down, and that's as expected. It's why we didn't do a fundraise last year, because as you can see, we had a loss of cash last year. That has come down in the ordinary course of business as we've invested. But in terms of the broader portfolio, we are looking to over time to move to this growth portfolio. So you can see that in healthcare, fintech, and software more generally now becoming a more dominant part of the portfolio. And then we still do have the historic portfolio of renewable energy assets. And then we've still got a couple of schools, which I will touch on in a moment. But the portfolio, if we look at it more broadly, is a portfolio of 50 companies, so diversified across by number. And importantly, they're employing over 2,000 people. And it's important that VCTs are backing employment growth. It's very much one of the core reasons for being, and why why the government provide tax support to investors in VCTs. So if we move on to the next slide. Now this is, many of you will be familiar with this. This is looking as a snapshot of where the portfolio is in terms of maturity. It's a point in time, so it's not that we have particular targets, but it's just to give you a sense of where we are. So if we look at investments in terms of their revenues, the higher the revenue, the more mature and less volatile they should be. You'll see that the early stage is still at 13%, so on the sort of higher end, reflecting that it is a more immature portfolio than perhaps some of the other Albion VCTs. But what we are seeing is that there is now an increasing amount in scale up. So 56% of the invested portfolio is now in companies with revenues of more than 5 million. And the picture's broadly similar if you look at employees. It's a sort of crude way of getting a sense of scale. And from that, you can see that 27% are in businesses employing more than 100 people now. Next slide, please. Just looking at the top 3 companies in the portfolio, just to give you a sense of the sort of concentration of those investments within the broader portfolio. We've got the hydro scheme, which, despite its write-down, is still a substantial asset and gives us a decent income stream into the VCT. Gravity, I touched on earlier. That is the platform which manages the APIs, and that's the connection, the way you connect different bits of software together. So it's the output of one becoming the input of the other. That has moved forward nicely. Its revenues have grown 8 times since we've invested. Over 100 people employed now, definitely going in the right direction, and that's reflected in the book value write-up that you can see here. And then our school is still a significant investment. Now, clearly, there is some uncertainty around private independent schools at the moment, not least the current government's decision to impose VAT school fees with effect from January, which was earlier than expected. However, it's worth just making the point that Radnor is a well-run, profitable school that is well set to weather what will be a more challenging area. But clearly, this is one that the outlook is more uncertain than perhaps than it was. But I'm confident that we've got a very strong offering now, a very strong management team who will navigate the more difficult operating environment, and we will see that business grow over time. Next slide, please. New investments, it's clearly the job of a VCD to be continuously investing into the young, exciting companies coming through. I'll pick up Trufera and Facecast on a separate slide, but this, in terms of continuing to invest in those core areas of B2B software and healthcare, particularly health tech. So Open Dialogue is a platform that can be used by a variety of companies to implement AI in their customer services through a chatbot. So clearly very topical. The technology that has arrived through the arrival of large language models like ChatGPT means that you can deliver a customer service in a far more automated way than previously. And GridCog is a platform that helps large corporates in particular manage their energy resources. So whether that's, for example, where they've got a variety of renewable energy assets within their company estate, whether that's solar, whether that's wind, but it's a much broader product to allow large corporates to model through how they can use renewable assets as they transition towards net zero, which is an inevitable and important target for many corporates. And then finally, Mondra is like GridCog, is very much in line with our growing exposure to what we call climate tech, so technology that is managing the climate the climate emergency, for want of another word, that is around us. And Mondra allows large retail chains, particularly grocers, is where they're very strong, to manage their supply chain, to measure the carbon footprint of the ingredients that come through their supply chain, and then enables them not only to report on the carbon footprint of their products, but it's increasingly used when designing new products. And that is looking all the way back to the plant in the ground in a farm, all the way through their suppliers, right until the product that you will buy when you go into a grocer. Next slide, please. So Trufera, very much within that climate tech focus. This is specifically a platform that's designed to help landowners manage their natural resources. And a good example, and one probably the most prevalent use of it, is to manage trees and manage forests. So lots going on around making sure that forests aren't chopped down, that you monitor that they are indeed doing what they're meant to be doing, which is absorbing carbon. They're often used as collateral against carbon credits. And this platform uses satellite technology to, at scale, monitor natural resources right across the globe in support of landowners that are able to monetize their forests through the issuing of carbon credits, as an example of where this might be used. So a very strong team that we backed, who've been involved in high growth businesses in the past. We invested 7 million across our Albion VCD, so a significant investment, of which 0.9 million came from this fund. And if we move on to Phasecraft, next slide, this is very much in the area of sort of deep tech. So, technology designed to solve a very fundamental problem in a very novel and innovative way. And the reason, we are looking to build a small exposure to deep tech is that the creation of the IP, so the fact that there is real IP here, enables you to build very significant value, albeit these investments take longer to come to fruition. But but we can be patient in a VCT given the long-term nature of an investment company. So Phasecraft is in the world of quantum computing. An awful lot going on there. There's quantum computing will fundamentally change the world in due course, and this is in the area of algorithms that would be run on quantum computing, and it can solve some really complicated problems. So the one they're particularly looking at is how to model materials in terms of material science. So really very cutting edge. It's a world-leading team in quantum that we've backed, and that we were introduced to the team through the activities Albion does, running two of the UCL University College London technology funds in conjunction with University College London Business. So the beginning in the early stages of a deep tech strategy within the Albion VCTs, but clearly it's will be in a limited way, but it's building on the experience that we've built in Albion over the last 11 or 12 years through our university's investment program. Next slide, please. Providing further capital to our portfolio is critical to our investment strategy. So you invest early, and then as we become more confident in the business and its business model, we then support those companies over time, building our investment exposure in a managed way. So unsurprisingly, you'll see further investment into Gravity, but also into UMed, Runa, and Nouveau Air. So very much in line with that follow-on strategy. New slide, please. Next slide, please. I alluded to our one exit, despite the relatively quiet M&A environment. We did exit Ophelos. It was an investment we weren't in for very long at all, but we were approached by Interim. So this Ophelos was a digital platform to manage debt. So effectively in an ethical way, and it was acquired by the Swedish listed Interim. We realized 2.1 times our money, and that was on an original investment across all the Albion VCTs of 3.2 million. This VCT's share of those proceeds was just under £1 million. So a relatively small exit. We were in it for fewer years than we would normally expect, but I think in a year of very few exits, it's nice to see that the portfolio is delivering companies that are of interest to strategic buyers. Next slide, please. Quick mention on the sunset clause. This is a theme that's been around for the last couple of years, and I've got good news here. This was the sunset clause that was contained in the VCT legislation, which said that the government needed to extend the scheme by April 2025. That has now been successfully achieved. It had to go through various processes, not least of which a final sign-off by the European Union. That has now happened. The legislation has now been enacted, and we can move on from the sunset clause. And we've been given an extension for the scheme for 10 further years to 2035. So that's a piece of good news for the industry. It gives certainty not only to our investee companies who look to us for further funding, but it gives certainty to you as shareholders and indeed Albion as the investment manager. Next slide, please. Quick recap on our strategy. We've probably covered it, but it is the ability to invest at various stages of the cycle, but we're comfortable investing early and then supporting those companies over time. But importantly, what we are looking to invest behind is very long-term trends particularly in view of the fact that these are long-term investment vehicles, very focused on business to business. We avoid companies that have direct exposure to the consumer, which can be more volatile, particularly in times of economic uncertainty. And our current target is very much in the area of software and healthcare. Next slide, please. Touching on ESG, many of our investors are keen to see that there is an ESG overlay. So if I sort of look at that both from a fund perspective, but an Albion capital perspective, we, from an environmental, we are looking to transition to net zero as a business. So we are offsetting our carbon, and we're looking to reduce our carbon footprint over time. And we have a team within Albion who voluntarily care very passionately about this area and are putting together a plan of initiatives we can do that. From a sort of social point of view, we're very keen to support our companies in terms of how they look at things like D&I, but also we ourselves are now working with a platform called Fair HQ, which is a way of measuring how we're doing against important areas like inclusion within the Albion business. And then alongside that, within the sort of deal origination, we are supporting women entrepreneurs who are very underrepresented in software to have the confidence and the support to launch their own businesses. And we're now into the second year of our Radio Accelerator, and we're very pleased with the entrepreneurs that we had last year, and indeed many that are coming through this year. And then on the sort of governance side, we clearly report against ESG when we are looking at our portfolio. So we are reporting on a regular basis to your board. And so we are signatories to the UN PRI, and we have recently published a report which pulls together all our ESG initiatives and is available on our website. Next slide, please. Quick reminder about voting. The board is very keen to engage with shareholders, and part of that engagement is making sure that shareholders are able to vote and are encouraged to vote. So we are doing what we can to make that easier. It's now can be done online. So if you are signed up to electronic communications, you will now receive notification emails highlighting to you that a vote is needed, and then also sending reminders. But you will also have the opportunity to vote today directly by the Luby platform, as Richard has described. Any questions, please do feel free to get in touch with us. Obviously, anything we can do to help with that voting, it's really important that shareholders are able to exercise their shareholders' right to vote. New slide, please. Next slide, please. Looking forward, clearly, we are continuing with our core focus, which is on those mission critical products and services, and that's to provide that resilience, continuing to limit our exposure to the consumer. But there are uncertainties still, and we have a new government. We are optimistic, and certainly the dealings I've had is that they are very growth focused, very supportive of innovative companies, and in that respect, we are, I think, beginning to see some early signs of an improved environment for our companies. But we will see how that pans out over the time. But if I now turn to the next slide and just talk about the first quarter, perhaps that puts a bit of flesh on that. So I'm pleased to say that we had a very, very small loss, effectively flat for the quarter. So that's a big step forward from what was a significant loss last year. So that is encouraging. In terms of other events, dividend, we've declared a dividend of 1.12p. That will be paid on the 31st of July. The top three investments now account for just over 16% of NAV. We will continue to run our AGMs, as indeed this AGM, virtually. But I do just want to bring to your attention our physical annual shareholder seminar. So this is an excellent opportunity for shareholders to engage with the board, investee companies, and indeed Albion as the investment manager. 20th of November 2024, that'll be at number 11 Cavendish Square. Places are inevitably limited. It's a decent sized venue, so please could I ask that if you're keen to come, that you reserve your place as soon as you can. And also, if you then subsequently find you are not able to come because others won't have had the opportunity, please let us know so that we can make the place available to others who may not have been able to sign up in time before it's oversubscribed. So on that note, I'll hand back to Richard, who's going to run a Q&A session for you all. Richard.
Well, thank you very much, Will, and thank you for a presentation which is, as ever, is lucid and comprehensive and candid too. This hasn't been the easiest of years, but I think I should say on behalf of the board that we really appreciate what Albion Capital are doing for this venture capital trust, and we do have full confidence in you and your team. So we appreciate very much what you're doing. So we now have a number of questions which have already been submitted. There are a couple of them which I think Will has probably already dealt with. We have the one about the why is the AGM virtual and not in person? And I think, as I mentioned, and as Will has mentioned, we feel this is really the way we get to a much wider group of shareholders. You may recall, some shareholders may recall, that a couple of years ago, one of the other VCTs in the stable, Albion Tech and Gen, held a hybrid AGM. But actually only 5 people turned up to that, and I think everybody felt that it was far better to engage with shareholders in the way that we're doing now. But as Will has also mentioned, we have got the shareholder seminar coming up in November, 21st of November, 20th of November, sorry, in 11 Cavendish Square. And last year's was an excellent one, which we had presentations from a couple of investee companies and extensive Q&A with Albion executives. So I would just endorse what Will has said there and very much encourage people to come along and really participate in that. We have had another question. We had a question about the notice period for general meetings and what's the justification for the proposed change in Special Resolution 12. Well, the current notice period is 21 days, and Special Resolution 12 proposed reducing this to 14 days. This is really just about providing additional flexibility to the chair in scheduling and arranging general meetings going forward, which we really feel is very much in the best interest of the company. If we wanted to, say, cancel share premium reserve in order to increase distributable reserves through a general meeting, other things that require a general meeting, it gives us more flexibility to do that. So we would encourage people to support that. We have a question also about contracts of appointment for nominees. This is a contract of appointment for nominees state that each of them will be non-executive. How can there not be any director with executive powers? Or is Albion Capital LLP a non-disclosed shadow director under the terms of the management agreement? Will the present directors, if reappointed, undertake to make a copy of the management agreement available to members? Well, the nature of investment trusts is such that we only do have non-executive directors. I don't know of any others where executive directors sit on the board because we effectively outsource the executive process to Albion Capital. So this seems to us entirely appropriate. Will, do you want to add anything to that?
No, that's completely right. I mean, the principle is that this VCT is in itself an investment company. The executive role is performing the investment function, which is wholly delegated to Albion Capital as your investment manager under the terms of a management agreement, which in itself clearly is a commercial agreement between Albion and the funds, and it is the job of the non-executive directors to oversee that appointment and monitor our performance. So the lack of executive directors is completely consistent with the structure of an investment company and Albion, which is what this VCT is.
Excellent. Thank you, Will. Question here: has the board considered mergers with any other Albion VCT? Well, a number of people may be aware that on the 24th of July, the boards of the Albion VCTs did announce that they have entered merger discussions, potentially to reduce the number of Albion VCTs from 6 to 3. This is obviously not a process that takes place overnight, and discussions which are ongoing may or may not lead to a merger, or some or all of Albion VCTs. But if they do go ahead, then clearly the thinking behind this is very much about, among other things, achieving cost savings, achieving administrative efficiency and simplicity. But it's a live issue, and as we say, we will very much keep people aware of progress via updates. There's also a point of order which has been raised, which reads as follows: I believe that the 13th of September cut-off date for proxies and share transfer date is wrong in law. The 48-hour provision of Companies Act is not working days, and as with formal notice of AGM, includes weekends. Would the chair please seek guidance on the matter and advise how many, if any, share transfers were registered on each of the days of the 14th, 15th, and 16th of September? For future years, will the directors note the point and, if necessary, ensure that AGMs are convened only on a Thursday or Friday? The registrars cannot agree to a seemingly correct period. Well, this is something that we have obviously reviewed with our legal advisors, and all I can say is that their advice is that our approach to this has been entirely correct. So we'll clearly keep it under review, revisit it for future meetings, but for the time being, as far as we're concerned, we believe that we are doing this in the correct way. I'm just looking to see if there are any other. Yes, there's a question: when will the AGM be available to view on the website? Well, it'll be available to view shortly in the near future, and so shareholders who have opted for electronic communications will be notified once the recording is uploaded to the website. Alternatively, you can monitor the website for updates. I think we note with interest how many people watch this live and how many people, because the timing isn't necessarily suitable, watch it at a later date. And I think it's very important that people do have the opportunity to review this in an asynchronous as well as a synchronous way. That, I think, concludes all of the questions that I have been given. So in that case, we will now continue with the formal business of the AGM. The full text of each of the resolutions were set out in the notice of the meeting, and the board is recommending that members vote in favour of all the resolutions. So I'll briefly summarise these. The first resolution is to receive and adopt the company's accounts for the year ending 31st of March 2024, together with the strategic report and the reports of the director and auditor. Second resolution is to approve the director's remuneration report for the year ended 31st of March 2024. The third resolution is my own re-election as a director of the company. The fourth is the re-election of Anne Beresford as a director of the company. The fifth is the re-election of Richard Wilson as a director of the company, and the sixth is the re-election of Nita Patel as a director of the company. The seventh resolution is the appointment of Johnson Carmichael as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which audited accounts are to be laid. The eighth resolution is to authorise the directors to agree the auditor's remuneration. The ninth is to allow directors to allot shares. The 10th resolution is a special resolution to give the directors the power to disapply preemption rights. The penultimate resolution is again a special resolution to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. And the final resolution provides the company with the option to have a 14-day notice period for the annual general meeting, should this be necessary. Well, that concludes the summary of the proposed resolution, and I confirm that the voting is now finished, and I now declare the poll closed. The results of the voting, including the proxy votes on each of the resolutions, will be announced after the AGM through a regulatory information service announcement. Additionally, the results will be published on the Albion Capital's website as soon as it's reasonably practical. But in the meantime, I can show you on screen the current proxy votes that have been received by the registrar. And as you will note, the proxy votes are comfortably in favour of the proposed resolutions. So thank you. That concludes the business of the AGM. I'd like to thank all the members who joined this AGM by webcast. We do welcome any feedback you may have, which you can do by sending email to the AADC chair at Albion Capital. And since there is no further business, I declare the meeting closed, and on behalf of the board, thank you for joining this company's AGM. Thank you.